Bitcoin just split in two this weekend. Two chains, two sets of rules. In a serious argument that the one you're holding is the corporate captured one, with Michael Saylor cast as the man who took it. And these aren't trolls. These are people who've been here since the beginning. Warning, there are intelligence agents inside the gates of Bitcoin right now. So is Bitcoin being taken from us? And while the Bitcoin civil war has been raging, Scott Bessent and the Bank of Japan burned an estimated $87 billion in 48 hours, propping up one currency. And Jamie Dimon went on PBS and said out loud what the dollar's reserve status actually runs on. So which fight decides the next 10 years? The one inside Bitcoin, or the one nobody in Bitcoin is watching? This is Truth Block. I'm Hurley. Let's mine truth. Quick favor before we get into it today, most of you watching are not subscribed. And that one tap is the best way to support the channel. We appreciate you. Okay, let's start with what actually happened over the weekend, because it's easy to get lost in the noise. On Saturday morning, Bitcoin had one chain. On Saturday afternoon, it had two. And the whole thing turns on one word that got thrown around all weekend by people using it three different ways. That word is fork. A soft fork tightens the rules. Some blocks that used to be legal become illegal, but anything legal under the new rules is still legal under the old ones. So old nodes keep following along. SegWit and Taproot were soft forks. A hard fork loosens them instead. So old nodes reject the new blocks outright. That's a permanent break. Two chains, two coins forever. That's how Bitcoin Cash was born in 2017. BIP 110 was a soft fork. The basic idea was to cap certain data fields for about a year to make it expensive to stuff pictures and tokens into blocks, then to let the rules expire on their own. The problem was miners. In the last difficulty period before the deadline, 51 blocks out of 2,116 signaled support, call it 2.5%. So the proposal had a backstop built in. At block 961,632 on Saturday, BIP 110 nodes would reject any block that didn't signal. Antpool mined one that didn't. Most of the network took it. BIP 110 nodes threw it out and followed a block from Ocean instead. And right there, Bitcoin had two chains. The new one mined a second block, then stalled. It inherited Bitcoin's full difficulty with almost none of the hash rate. And this morning, it's more than 80 blocks behind and falling further every hour. Now here's why this battle isn't over. That chain is frozen, and not because anyone attacked it. As I said, it inherited Bitcoin's full difficulty with almost none of the hash power. And difficulty only adjusts every 2016 blocks. So it has to mine over 2,000 blocks at big network difficulty with a rounding error of the hash rate before it gets any relief. That would take years. The only way out is to change the proof of work entirely, which resets difficulty and makes every existing miner useless against them. And that is the hard fork. That's when a new coin is created. A permanent split. And the miners behind it have already floated pausing on the current algorithm. A few weeks ago, we said that $16 million can't buy a consensus rule. Turns out a minority of nodes can't buy one either. So let's take the other side seriously, because it's earned at least that. Matt Crater traded at Clarium Capital, which was Peter Thiel's old fund. And he now runs Bitcoin University. He sat down with Natalie Brunell on Thursday, the day before the deadline, with signaling stuck around 2%. He could read those numbers as well as anybody, but he said this anyway. And the grievance underneath it is real. Mining pools get paid to put spam in blocks. Node runners store that data from now until the end of time. Whoever profits is not whoever pays.
I think the reason you and I haven't experienced this before is we got into Bitcoin after 2017. And so 2017 was a real civil war.
For the block size wars.
For the block size wars and competing, the various forks that came out of that. And I spent my early years in Bitcoin attacking the scammers who were in the crypto space, the Ethereum and Cardano people, for example, and all the different scams. And so we had sort of a period of peace from 2017 until, call it 2023 or 2024, because Bitcoin maximalism was reigning. And they were sort of the winners from the previous war. But what we're experiencing now, Bitcoin's in a very bad place where it actually is a civil war. And the enemy is within the gate. We have many, many different enemies. And so the community is trying to, and we have a situation where conference promoters are investing in these companies that put spam and then promoting them at their conference, for example. And so we have Bitcoiners divided. And so there have been very strong personal attacks on both sides. But Bitcoin has reached the stage of maturity where it's an extremely important project that has enemies I mean, our ultimate goal is to separate money and state. And so we have enemies inside of Bitcoin. And I certainly, I think we should still treat each other well, but at this point, we have actual bad actors. We have intelligence agents sowing disinformation and misinformation. We have a really bad situation where just because people call themselves Bitcoiners, when you see what they're doing and they're trying to actively undermine the protocol. And I'm certainly not saying that's why you got attacked, but this is a civil war situation.
So that's clearly not a man describing a disagreement. That's a man describing an infiltration. And if it all sounds a little hysterical to you, stay with me, because this next minute is the part of his case that I think is correct.
I guess it really comes down to two different philosophies. Do mining pools get to decide the rules of Bitcoin, or do individual Bitcoin node runners? The problem, if we leave this up to the Bitcoin, the large mining pools, or we leave it up to the large Bitcoin companies, for example, like Coinbase, these are all centralized points of failure that can be, they're regulated companies. They have to do what the government tells them to do. So for example, Foundry, which is a large American mining pool, if the US government came to them and said, for example, under the current administration, we don't want you mining any transactions that have to do with the regime in Iran or North Korea or Russia, wherever it is, Foundry basically has to do what the government tells it to do because it's a regulated corporation. Now, Foundry's current excuse is a very clever one. Thanks to Satoshi, basically they say, well, we just mine what the nodes send to us. And that's basically how they get out of it. But if the mining pools end up in control and they're deciding what to put in blocks rather than the individual Bitcoin node runners, then you could end up with censorship.
Crowder is right about the mechanism. Foundry is a regulated American corporation. If the Treasury tells it what it can't put in a block, it complies. That's what a license means. The same permission layer we've been mapping on this show from the beginning, showing up in the one place we all assumed was immune. But concentrated hash rate is a problem BIP 110 was never going to solve. A soft fork doesn't decentralize mining. It tells you which pools will run your rules and which ones won't. And on Saturday, we found out. The answer was 2.5%. And BIP 110 could never have stopped spam either. In fact, its own specification even admitted that. Determined users can always fragment the data and encode it another way. So it raises the cost, but it doesn't close the door. So we came within one block of splitting $1 trillion network over a filter its own authors concede is porous, which tells you the fight was never really about the filter. And weeks like this one are exactly when people sell coins they stacked for an entire cycle. That urge to get liquid and wait it out is the most expensive instinct in this asset. And that's why this show is sponsored by Ledn. If you need dollars, don't sell your stack. Borrow against it. Ledn lets you take up to 50% of your Bitcoin's value, funded straight to your bank account in under 6 hours, with no credit check and no capital gains event, at around half the rate of a credit card. With Ledn, your Bitcoin stays in secure custody and is never lent out. Ledn has over $8 billion in loans since 2018 across every cycle, without ever losing a Satoshi of client funds. So head to learn.ledn.io/simply to learn more. So what is this civil war really about? It's a spam debate turned into a corporate takeover argument because spam was never the wound. The wound is that Bitcoin is growing up and leaving a place a lot of us loved. The cypherpunks, the libertarians, the freedom maximalists, and sovereign individuals. That's the culture that carried the first 15 years when nobody else would touch it. And I personally owe a lot of what I understand about money to that era of Bitcoin culture. But it isn't the culture that carries it from here. And underneath all the technical arguments, I think everybody knows it. Because Bitcoin was never going to fly under the radar and become global money. There was no version of this where a few million of us quietly opted out and the world followed us out the door. The route always ran through the fiat system. Bitcoin gets adopted by the institutions it's going to outlive. And that was always the deal. My friend Adam Livingston published a piece on Friday that lays it out really well. Bitcoin doesn't end the state. Courts, police, taxation, and armies run on a separate track from currency issuance. And they survive Bitcoin just fine. What Bitcoin ends is the issuance privilege. Every government meets it on the same terms as everybody else. If you want more, you buy it from somebody willing to sell. So the danger was never really confiscation. It's custody drift. If 10 years from now, most Bitcoin exposure is a claim on 3 or 4 regulated custodians, then the purists were right. And it won't have taken a fork to get there. But just look at what this fight is costing us right now. HODLing, a man this community once raised a legal defense fund for, is posting that he's lost faith in Bitcoin as a technology for freedom. that the core idea is gone, and that he'll put his energy wherever the idea lives next. Michael Saylor's entire response was 8 words. A fool and his money are soon parted. This is 2 men who both deeply love Bitcoin, who seem to be speaking right past each other. But go back to what Saylor said when HODLing pushed him on whether the miners run the show. He said nobody controls Bitcoin. Consensus emerges from the network, and the network has spoken. Whatever you think about the man, that's exactly what happened. Capture would mean somebody can change the rules. What happened this weekend is that nobody could. Not Saylor, not BlackRock, not Foundry, not Luke Dasher, not 2.5% of the hash rate. Everybody who tried to steer Bitcoin this weekend failed, and that includes both sides. Now, there's one piece of the purist case I take seriously, and it's the centralization of mining. I agree with Jeff Booth that as long as the network stays decentralized and secure, Bitcoin will win as the apex money, and everything else is noise. So the only question that matters is whether hash rate stays spread out, and no soft fork answers that. It gets answered by who plugs in machines. And thankfully, mining is a brutal business with thin margins, cheap power, and no mercy. It clears out the weak faster than anything else in Bitcoin. And that sounds harsh until you realize it's the mechanism that keeps the whole thing honest. Right now, we're in the first sustained hash power bear market in Bitcoin's history, with no new all-time high since November. The big data centers have taken their machines to AI because the money is better there, and hash rate is off roughly 16% from its peak. Honestly, I hope that runs a while longer. Every corporate miner that walks away to chase AI is room on the network for everybody else. Difficulty falls, small operations get profitable again, and some of those public miners will never come back. So if you've ever been curious about running a machine at home, this is the strangest and best window we've had in years. Complaining about pool concentration while none of us are mining is not a strategy. Which brings me to the only thing in this fight that's actually under your control. Not the pools, not the filter, but holding your own keys. And that's why this episode is sponsored by BitKey. A lot of you moved wallets these last 2 weeks, and have been thinking long and hard about your self-custody setup. And the question I keep getting since is fair. How do you know the next one isn't the same story? Well, here's why I landed on BitKey. It's multi-signature by default, which means you need 2 of 3 keys to move your Bitcoin. Your phone, the hardware device, and the recovery key. No single device and no single piece of paper holds everything, so there's no single point of failure. There's also no seed phrase to write down and hide and worry about for the rest of your life. Recovery is built in for the day you lose your phone or device, and so is inheritance, with no added subscription. And the timing is great. The BitKey sale is on right now for 15% off, and my code stacks on top of it. So visit bitkey.world/truth today and use my promo code TRUTH to get an additional 10% off the new BitKey. So that's the epic battle taking place in Bitcoin that we're all watching. Now here's the one almost nobody in Bitcoin is watching. On July 30th, Japan spent an estimated $53 billion in a single day buying its own currency. That's the largest one-day currency defense ever recorded. The next day, it spent $34 billion more. And this time, the United States joined in for the first joint yen operation since 1998. Call it $87 billion in 48 hours. The yen went into that week near 164. It touched 155. This morning, it's back near 158. A quarter of the most expensive currency defense in history, gone in 5 days. Then a bad jobs report moved the yen further in 20 minutes than the entire rescue managed all week. And that one cost nobody a dime. So why does Washington care about the yen at all? Well, because Japan is the largest foreign holder of US treasuries. If Japan defends its currency by selling treasuries, American yields go up at the exact moment America can least afford it. So Washington handed Tokyo euros and a Fed facility instead. That was not a favor. Luke Roman explains what's underneath all of it better than I can.
He probably has, in the same way that his statement last week of, well, I want to fight inflation unless there's a crisis, in which case, then I'll do whatever it takes to. And I think that ultimately that I'll do whatever it takes is, or that, to make sure there's fair prices or whatever, right? Which is, he's referring to the Treasury market.
Yeah.
We've been saying ever since Powell really coined the phrase for us, the Treasury market functioning. Since 2021, the Fed's shadow third mandate, really since 2019 with the repo rate spike. But the Fed's shadow third mandate has been Treasury market functioning. Nothing can interfere with that. And if they have to inflate, then they inflate. If they have to, cutting jobs, that doesn't really help with Treasury market functioning. So it's really, given a choice between inflation and Treasury market functioning, the Fed has 100% of the time in the last 7 years chosen inflation.
Yeah.
And I think he's going to be the same thing.
So the Fed has 2 mandates it talks about and one it doesn't. And the one it doesn't talk about is the only one it's never broken. Everything else is negotiable against it, including the inflation number they lecture the rest of us about. Which means when you ask what happens the day the debt math finally breaks, you don't have to guess. You've got 7 years of answers. Then on Friday, the man who runs the largest bank in America went on PBS and said out loud what the dollar is actually backed by.
And I do believe that America is what makes the world safe and secure for democracy. If America is in a weakened state, and this is important too, like if we're not the strongest military in 25 years and the strongest economy, we won't be the reserve currency either. The world will be fragmented and it'll be very dangerous for us. So, to me, this is more about keeping the world safe for democracy and freedom. And the alternative isn't very good. This is, we're behind. I mean, the fact that if you look at it, about 10 or 15 years ago, we should have looked at what was happening on rare earths, aluminum, certain steel, not all steel, certain steel, production of certain equipment, and said, we can't rely on China for that. And we can't allow mercantilist behavior. We need to do it here. We made a mistake. And to me, we acknowledge it. Let's just go fix it. And that's what this is. And we don't have a lot of time. And the war in Iran has pointed out, we didn't have productive capability to defend the United States if there was a real war that lasted for a long period of time. And that's a hell of a statement. And so, as I said, if you believe America is necessary for the free world, this is something we have to do, and we have to do it now.
Yes, that is a hell of a statement. The dollar's reserve status is not a property of the dollar. It's a property of the aircraft carriers. And he's right, which is the problem, because a reserve asset that has to be defended by the strongest military on Earth is a position, and positions get lost. Now stack the rest of the week on top of that. Oil sitting at around $85, which Groman has said for years is where the Treasury market starts breaking down inside fiscal dominance. And Scott Bessent went after Iran's shadow banking, threatening to cut counterparties off from dollar settlement entirely. Every time the dollar gets used as a weapon, it's free advertising for money that can't be used as one. So what does the world settle in when it doesn't trust anybody's promise and doesn't trust anybody's army? It needs something no one can issue, no one can freeze, no one can print more of, and nobody has to be strong enough to defend. That's a very short list. There's only one thing on it. Which brings me to the thing everyone was panicking about last week. The Clarity Act stalled, and the odds of it passing this year have collapsed from above 80% to the low 20s. And the people who hate this industry are throwing a party. And you know what? Let them. That bill exists to tell thousands of assets what they are, because they can't answer the question themselves. Bitcoin has never needed a senator to define it. Its supply is auditable by everyone with a laptop. Its rules are enforced by strangers who've never met. And this weekend, it proved in public that no faction on Earth can change them on a whim. Bitcoin already has clarity. That's what we spent the whole weekend fighting about. And that clarity only means something if you're the one holding the keys. And that's exactly what the Bitcoin way helps with. One-on-one, white glove help from real human Bitcoin experts. From anything from self-custody setup, hardware, running your own node, locking down your security, and even inheritance planning so the people you love can actually get to it. No question is too basic for the Bitcoin way. And when you visit thebitcoinway.com/Hurley, the first 30-minute consultation is completely free. So if the last few weeks have rattled you, don't sit on that feeling. Go fix your setup the right way with the Bitcoin way. Now let's zoom all the way out. Every monetary transition before this one got decided in a room. The goldsmiths against the metal, settled by whoever held the vault keys. In 1971, Nixon went on television on a Sunday night and announced the dollar was no longer redeemable for gold. Americans found out their money had changed while they were waiting for their favorite show to come back on. This weekend, a fight over what Bitcoin is got settled by a number anybody on Earth can check in real time. 2 blocks. No committee, no vote, no announcement, and no way to fake the result. The reason it was ugly is the reason it worked. Fiat settles its money arguments quietly, and you find out afterward. Bitcoin settles them in the open, in blocks, and everybody watches the losing side lose. So here's where we actually are. Bitcoin spent the weekend proving nobody can change it. In the same 2 weeks that 2 governments proved they can't hold a currency, and the largest bank in America admitted the dollar status runs on the military. We were arguing about whether Bitcoin is still ours, while the world was quietly running out of alternatives to it. Both fights are real. Only one of them is ours to lose. And it isn't the one that's trending. Now I want to hear from you. Was BIP 110 an attack on Bitcoin, an immune response, or a proposal that just lost fair and square? Minor centralization is the one part of the purist case I think is real. So what actually fixes it? And are you willing to be a part of the fix? Drop your thoughts in the comments. And if this provided signal, hit like and send it to somebody who thinks Bitcoin has been captured. And subscribe to Simply Bitcoin for more signal every single day. I'm Hurley, This is Truth Block. I'll see you Thursday.